Hey guys, it was an interesting day on Friday. So it was pretty slow in terms of the opportunities, just that the market was handing us pretty slow in terms of QQQ and NQ. That's sort of typical. We managed to latch on to some good ones though in the Magnificent Seven. So if you were watching those and you're thinking, geez, those are really key to the whole thing. It's correct. I mean, that's a really good strategy and a really good group of strategies that we've got that really get us through the day. For those of you who received Julie's email about the boot camp, so our alumni, you've got a deal there. We're going to do a little bit of remote learning for some of you who couldn't make it there. So you guys requested it, so we're going to do it. So make sure you read Julie's email, because if nobody does it, this is going to be an albatross for us. But take a look at that, and it of course includes some of this particular training, which it seems like everybody's kind of gravitating towards. So we'll include that in future live boot camps and sort of a live update portion from the boot camp. Okay, so with that said, let's take a look at NVIDIA. So NVIDIA is the one that I want to look at here, because that one gave us good opportunities throughout the day. The key was you had to wait, right? You had to wait for it to come to you. If you didn't wait for it to come to you, then you'd wind up sort of firing off a trade outside of the bands, and once you were out of the bands, it was it was a mess, because it's a big stock. It moves fast. It's hard to tell if you've made a logical move or a mistake. But I think when we look at the chart, you'll see how it starts to come together just based on what you've learned. Okay, let's look at the history here for the day and see what we're looking at. You can see that overall we had some pretty reliable trades on most of these things, but you really had to wait. So I mean, Microsoft got into our range, and the first time around it looks like a no-brainer. Then it goes and it violates, and it gets up, and it doesn't really trade back down through, and you get in and you're out flat and all that stuff, and that's really not the dream, right? You want to be able to manage these trades a little bit more and figure out sort of how to do a bigger picture thing. And if you think about that sorry, I can't talk anymore. Magnificent Seven course and the way that it relates to what you learned in the Income Trading Academy and everything, then what you start seeing pretty quick is the way that you want to go and isolate the institutional volatility, the institutional order flow, and then you stay away from things that are too elastic around the price thresholds, or that start doing things, like Meta did here, where they, they get down into the threshold level, but then they start finding new volume by price thresholds, new clusters that form out there, and really think about why is that cluster forming. So let me just pull this NVIDIA screen here and make it a little bit bigger so that it's easier for you guys to see and for us to review. And again, one of the important things when you're looking at the data, when you're doing the scrub on the data, is that you're making sure that your look back period isn't too far. So in this case, I'm using real tick, and in real tick, I want to make the look back 2 days. And that's because even with a 2-day look back, I've got a bunch of junk here from yesterday, and that stuff is going to interfere with today's price activity. You can see that I've got these bars are sort of color coded as to where they happened, when what was the most frequent or recent thing that happened, what was something that had less importance, more importance, all that stuff. We've talked about that a bunch. But what you should really get as a takeaway is, if you've got 5-10 days of look back or 20 days of look back, then this information over here is going to start to get less and less meaningful. You're going to start to see more price redundancy, and once you start seeing price redundancy, what you're going to see is not an error, but you're going to see a computation that's not going to tell you the same thing as what you're used to looking at. So today, this one started off, and it's not always the focus. And if you remember from that Magnificent Seven course, at that time, and that was just, what was that, 9 months ago, or 6 months ago, I guess. Yeah, 6 months. Can't even have a baby in that amount of time, right? So over the course of 6 months, this became my favorite, whereas 6 months ago it was my least favorite. And that's just sort of how these things rotate through. These are super caps, and I mean, the reason I'm trading them is that super caps give you more price reliability. They give you more vol band adherence. They're less elastic when they get to some of the levels. The problem with something like NVDA is, $800, $900, even if it's inelastic, a couple ticks above or below a line can represent, a dollar move. And a dollar move, if you're trading 1,000 shares of something, can be nerve-wracking. But in this case, if you just look at the thing logically and say, I'm going to control my share size by my risk, then things start to make a lot more sense. So risk is always your number one priority, and share size is how you control that priority. So if you can keep the share size smaller on something like this, then you don't always have to worry about, is it, oh my God, is this thing going to move $3? Is it going to move, then move it down to 50 shares, 20 shares, whatever. It doesn't matter, because you're waiting for bigger moves. It's going to have a bigger impact per share than just about any other stock that we're trading. Now, with that said, this morning it lined up pretty nicely once it got into the latter part of trading. So, we say 8:30 usually Pacific time is where we're going to start looking at these. In this case, today, I wasn't really looking at anything until about 9:30 Pacific. So, and that's because the moves this morning it was just swinging. Stuff was swinging all over the place, and that's not what we are looking to capitalize on. What I want to capitalize on is a later in the day repeat of something, right, significant that happened at one of those threshold levels. So again, for those of you who took the Magnificent Seven course, and you've been all through that, I mean, that's another 8 hours of your life or 10 hours of your life gone. But it's good learning, because I'm just talking you through what it is that I'm looking at for each one of the stocks. And each one of these guys is unique because of its price, because of the volume that it puts up, because of the way that it trades around support and resistance. So it's important to know the personalities. And, in this case, when we saw the, 10 a.m. to 11:30 top of the range there, and then saw this sort of gravity point here and the tendency for it to move back and forth in here, what we knew was if that would repeat later in the day, we would have some good trading opportunities. So how's this play out? So in the war room, which you guys are members of, and I think you should show up and just let's bounce some ideas off each other. We've got a fairly good group of people in there, a fairly good sized group of people in there, but I think everybody should be there. It's we looked at this, we looked at this inflection here, and we were ready for it. So that was the first one that we caught, and we talked in the room about a 900 spot 15 entry, and someone sent me a text and just said, did you mean 900.21? And I said, no, I meant 900.15. You need to look at that line as a trader and say, how likely is it that it's going to exactly hit the line, and how likely is it that I'm going to get filled on that exact, there might only be 10 shares up there, or there might be a block up there that gets printed. So it's just important for me. I want to be in the order flow on the way to that line. And you can see we had two opportunities right there, and that the target we were looking for in the war room today, or in the latter part of the session, was that 897.95 print. So about $2.26 per share, I guess, on the move was what we were hoping to capitalize on, and 2 times it came down. And this time here, sure enough, somebody said, well, what's your extension target? And I just said, I don't have one. So, and especially when you guys are texting me, I get it. Text is an easier way to communicate sometimes, because is everybody at their machine? Is Adrian sitting there? Is he watching this thing? I'm setting these up ahead of time. So I'm setting up a bracket, and the bracket is pretty straightforward. I mean, this is not rocket science. This is just saying, if it gets to about here, get me short, and if it gets to just above this line, get me out. And that's just the way the trade is going to handle sort of itself, right? It's not about me being there. As a matter of fact, at some point in there, I went downstairs and had a soft-boiled egg, because I don't like to sit and just stare at these things while they're trading. So if I know what I want to do, then I just want to let it do it. And sometimes, best practice just to walk away from the machine and let things happen. Then, we had this sort of interesting conundrum that we were talking about with one of you, where it came up and it hit here. So, on this violation, there was no track down below the line. And once it got up that high, the question was, should the prior volume by price be a big consideration here because of this guy out here? And because of the color, we sort of know that it's an earlier inflection. Well, that's a no-brainer, because it didn't really inflect there that often. What we can surmise is that right there and right there, there was some significant volume because of the way that price accelerated at those points. And then if we go and we look at, sorry about that, if we look at the corresponding areas on the chart, right, we see there was a lot of sell side volume there, and that it repeats, and we get a lot of sell side volume here. So we are, oops, a bunch of people didn't get the text, so this is going out as a replay anyway, so don't sweat it. But we're looking at this here and saying, what are we going to do if the price inflects here and reverses? And well, the first time it reverses, you've got nothing to do, because obviously you didn't know it was going to come up and hit this level. So there's no coulda, woulda, shoulda there. The thing to look for is the next bar reverses, comes up, hits that threshold level again, and now you have the opportunity, to look at this and say, am I interested, 901.20, 901.30 with a stop right up above there, and then am I looking for the move back down, and am I just looking for the spot 21 move, or the move back down into this down here at 897.95? So those are the things to think about. We talked about that one, or I mentioned the logic for that one, as some of you were getting into a couple of the other trades, and people were putting on Groupon and the shorts there and stuff that people were doing. I didn't see those today, but what I had said in the room was, I'm looking for the spot 21 line, the 900 spot 21 line to fail, and then a move down into 897.95. We got that, and then right there was a whole lot more. And like I said, no coulda, woulda, shoulda. Just focus on the price action in front of you, and you've got the logic, from the coursework and having done this for a long time now, right? Some of you have been doing these for at least a year, since that thing, well, 6 months, let's say, since that came out. This has been your focus point, and I think that if you just look at them through those lenses and look at them with that perspective of, I'm just going to do these sort of as textbook entries, then it's going to make it a whole lot easier to just get in front of these trades and manage them just exactly this way, as you're looking for them. All right, so that is going to do it for today. And, I just want to, tell everybody it's Fridays are slow. Don't let slow frustrate you. Mondays stink, right? Don't let that frustrate you. Mondays, we start late in the day. Fridays are, you know, it takes forever to settle in, and then a lot of times once it settles in, nothing happens because everybody's getting ready for the weekend, or there was, you know, a bunch of economic stuff that went on over the course of the week. Slow week of trading makes for a really slow Friday. But bear it all in mind, and, you know, go refresh, and remember, for goodness sake, that it's Mother's Day. So call your mothers and tell your kids to talk to your wives, because there's a good chance you're going to be in the doghouse if you don't do both. Okay, so have a great weekend, and I will see everybody next week for some more good trading here in the War Room. Take care.